Michael Saylor's Bitcoin buying machine is officially broken. Not metaphorically, literally broken right now. MicroStrategy promised to buy Bitcoin forever, no matter the price. But something just changed, and your money depends on understanding why. Here is what you need to know about the biggest corporate Bitcoin bet ever made, why it is suddenly failing, and what happens to your crypto when it does. This will change how you think about institutional Bitcoin investing forever. Stick with me because we are about to expose the uncomfortable truth that mainstream media is completely ignoring. Michael Saylor turned MicroStrategy into a Bitcoin buying machine starting in August 2020. He convinced Wall Street that a software company should hold Bitcoin as its primary asset. MicroStrategy issued debt, borrowed billions of dollars, and bought Bitcoin with that borrowed money. The strategy was simple but brilliant, at least on paper. Buy low, sell never, and eventually the Bitcoin goes up so much that the borrowed money becomes irrelevant. Saylor called it the ultimate long-term wealth creation strategy. Most people believed him because the math seemed impossible to argue with. Here is the problem though. This machine requires one thing to survive, and that one thing is now cracking. By the end of this section, you will understand why the whole system depends on a single variable that Saylor cannot control anymore. MicroStrategy has borrowed approximately $5.4 billion to buy Bitcoin. That is $5.4 billion that must be repaid with interest. The company issued convertible bonds, senior notes, and leveraged every available dollar. When Bitcoin was surging towards $70,000 in 2023, the debt looked tiny. Bitcoin was worth $5.3 billion, the debt was $5.4 billion. The math was tight, but it worked. Then Bitcoin crashed, recovered, and crashed again in late 2023. Suddenly the company's Bitcoin holdings fell below the debt load. Your borrowed Bitcoin machine only works if the asset keeps climbing higher. But here is what Saylor did not account for. Interest rates would stay elevated for longer than expected. MicroStrategy is now paying hundreds of millions per year in interest payments. These payments are eating into profits, weakening the balance sheet, and making future borrowing harder. The machine that was supposed to be unstoppable is now burning cash just to survive. Wall Street is quietly backing away from Saylor's approach, and nobody is connecting the dots publicly. Institutional adoption of Bitcoin was supposed to validate his strategy and drive prices higher, but something shifted in late 2023 and early 2024. Goldman Sachs cut Bitcoin research. BlackRock's spot Bitcoin ETF has seen massive outflows in certain weeks. Institutions that were supposed to be Bitcoin true believers are now taking profits and reassessing. The narrative that changed everything was simple. If institutions really believed in Bitcoin, why are they not buying aggressively right now? Saylor is still buying, still borrowing, still promising that Bitcoin will reach $500,000 per coin. But the institutions that were supposed to follow his lead are now moving sideways or exiting positions. This creates a dangerous dynamic for MicroStrategy shareholders because the stock now depends entirely on a single bet. If Bitcoin crashes 20 or 30% from here, MicroStrategy's debt becomes genuinely problematic. The machine was supposed to work because everyone would follow Saylor into the market. Instead, the smart money is being more selective, and that changes everything about the risk calculation. Let us look at the actual performance numbers because this is where the narrative breaks down completely. MicroStrategy shares peaked at around $420 per share in January 2021. The stock now trades around $18 per share on average. That is a 95% loss for anyone who bought Saylor's vision at the peak. Bitcoin itself is up massively since 2021, but MicroStrategy shareholders are down 95%. Why? Because leverage amplifies losses in both directions. When Bitcoin went up, the stock should have gone to the moon. When Bitcoin went down or sideways, the debt crushed the returns. MicroStrategy shareholders have been financing the Bitcoin machine with their own wealth destruction. The company has spent over $6 billion buying Bitcoin. If you calculate the average cost per Bitcoin, MicroStrategy paid an average of about $26,000 per coin. Bitcoin is now trading around $43,000 per coin. On paper, there is a gain. But once you factor in the interest payments, debt service, and opportunity cost, the real returns look much uglier. MicroStrategy is essentially a leveraged Bitcoin fund disguised as a software company. Your money would have been better off in actual Bitcoin. Here is the specific trigger that could cause the machine to catastrophically fail. MicroStrategy has investment-grade credit ratings from major agencies. If Bitcoin falls below $30,000, the company's credit ratings will be cut to junk status immediately. Once that happens, borrowing costs will triple or quadruple overnight. The company will not be able to refinance existing debt at reasonable rates. The beautiful leverage machine becomes a financial prison. Saylor knows this, which is why he keeps buying aggressively and talking up Bitcoin prices publicly. He needs Bitcoin to stay elevated to keep the credit ratings intact. This is not investing anymore. This is psychological warfare mixed with financial desperation. The second signal is even more dangerous. If MicroStrategy's stock price falls below $12, lenders have technical clauses that allow forced selling. The company could be forced to sell Bitcoin to raise cash, which would crash Bitcoin prices, which would force more selling. It is a death spiral scenario that Saylor created through aggressive leverage. Most people do not understand that they are essentially betting on MicroStrategy's debt never being called. One interest rate hike, one credit agency downgrade, and the whole thing could unwind. Here are the 3 things you must understand before making any Bitcoin decisions based on corporate strategies. Number 1. Michael Saylor's Bitcoin machine works only if prices keep rising and interest rates stay low. Neither of those things are guaranteed. Number 2. Institutional adoption looks different than expected, and institutions are being much more selective than Saylor predicted. Your Bitcoin future depends on genuine utility, not just corporate buying pressure. Number 3. Leverage magnifies everything, including losses, and MicroStrategy is the most leveraged Bitcoin bet in corporate America. The company is not a Bitcoin holding company, it is a debt vehicle that happens to own Bitcoin. If you are considering any investment based on Saylor's strategy, understand that you are betting on a specific scenario where everything goes perfectly. One bad quarter, one recession, one Fed decision, and the machine stops working forever. Subscribe to Wealth Pulse for daily insights that move your actual wealth forward.